Welcome everybody to this webinar on Convergence, the tower at Convergence in Oklahoma City. This is a high unemployment area project approved by the USCIS, has its 956F approval already, and very high quality project. The stage of construction is pretty advanced. The capital stack is very favorable for investors, developed by developers with very strong track records in the city. And today we have them with us. Thank you so much, Mark and Megan, for joining us. And Sherman, who's LCR CEO. Welcome, everybody. Before we get into the webinar and ask questions and try to understand a little bit more about this project, I do want to take a minute and introduce myself, and I would also invite the other participants to introduce themselves. I'm Shilpa Menon. I'm the Managing Director of Commercial at LCR Capital. I'm based in Mumbai, and it's a great pleasure today to host today's session on behalf of LCR. And I'm joined today by Sherman Baldwin, our CEO, who's deeply involved in bringing this project to life. I'm also very delighted to welcome our guest from Robinson Park, Mark Befford, CEO of Robinson Park, and Megan Gelmers, President of Development at Robinson Park. So welcome again. Mark and Megan, would love for you to, say a few words, your introduction and, your role in developing this offering.
Yeah, you bet. Thank you, Shilpa. Mark Befford, CEO of Robinson Park. Robinson Park has been in Oklahoma City for 120 years. That's through different acquisitions and mergers. Proud to merge with a 100-year-old company, Harrison Levy Company, probably about 25 or 30 years ago, which gets us to where we are today. We are a full-service real estate firm. We have 5 primary verticals in the Robinson Park portfolio, and that is a brokerage firm. We're tied to the Newmark companies. So we have the state of Oklahoma franchise for the Newmark companies, which is a publicly traded entity. In addition, we have a very large facility management company. We manage all the facilities that we own. We do some third-party management, but only from a strategic standpoint. We have our development group, which is led by Megan. She will talk here in just a second. And then we have our own design and construction group that we do mostly just interior fits. And then probably our primary focus is our investment strategy. We are the largest landlord in downtown, or actually in Oklahoma City. We're the largest office owner in Indianapolis, Kansas City, as well as have offices in Columbus, Winston-Salem, North Carolina, Tulsa, Oklahoma. We've also are in the hotel business. We have 10 hotels spread across the country. And we're in the industrial sector through some private-public development with the city of Oklahoma City. We've also have built a SaaS company, which is built around a software that manages and operates real estate, primarily for our own property, but it is a white label product that others can buy. In addition, that we own a service company that does janitorial, security, window washing, landscaping, restoration, and street maintenance. We have the part of our goal is to continue to bring Oklahoma City and the state of Oklahoma to new heights and to new levels. And one of those things is we actually clean the streets for every turnpike and every city street here in Oklahoma City. So, Megan.
Thanks.
Hello, I'm Megan. I'm the president of development here at Robinson Park, and I've been involved with Convergence through every phase of the project lifecycle, beginning with the original land acquisition and the early visioning for what this district and development could become within Oklahoma City. From there, my role expanded across the entitlements, master planning, design coordination, and assembling the broader development team. As the project evolved, I worked closely with our architects, engineers, contractors, consultants, and public partners to move the tower from concept into a fully executable development. I've also been heavily involved in the financial structuring of the project, including capital planning, incentive coordination, lender relationships, and partner engagement to ensure we created a financially sound and project that's capable of supporting the scale and our overall ambition for Convergence. So today, my focus remains on executing and ensuring the project delivers on both our economic objectives and the broader impact to Oklahoma City. This is not just another office building, it's a catalyst of the larger the ecosystem here in Oklahoma City and really bring long-term investment momentum to our city. So having the opportunity to help guide the project team from land acquisition through design, financing, and construction has really given me a uniquely comprehensive perspective of this project and what makes our development differentiated.
Thanks a lot, Mark and Megan. That gives us, I think, sure it gives a lot of comfort to our investors to know that the project is being run by such capable people, a competent team. Sherman, what are your, I mean, I'd love for you to sort of talk a little bit about why you kind of looked at this project and said this needs to be on the LCR platform.
Sure, happy to. Thank you all for joining. And at the end of the day, at LCR, we invest in people. And what Mark and Megan just shared is exactly why we've invested in Convergence. They're two incredibly competent leaders, and this is a terrific project. So we were fortunate enough to get introduced to Mark and Megan through an immigration attorney. And we are very proud of the Convergence project. Robinson Park and their partner in this project, Gardner Tannenbaum, are the two leaders in the Oklahoma City market. The Oklahoma City market is a very interesting market. It's not, it's not a gateway city like LA or Miami or New York. I would describe it as a strong tier two American city. And in that, what is unique about Robinson Park is that they have a firm hold on the market leadership position in terms of real estate, as Mark was describing. The national firms really avoid Oklahoma City because of the strong dominant position that Mark and his team have been able to create. So we feel that that is a bit of a protective moat for development in Oklahoma City and for this project. The anchor tenants in this project are terrific. You have the United States Air Force. Tinker Air Force Base is one of the largest Air Force bases in the United States, and it's 20-minute drive away from Convergence. University of Oklahoma is also an anchor tenant, and Boeing Integrated Defenses as well. So at the end of the day, there's a lot of buzz in the EB-5 market today about rural projects, and I get it. There is speed in a rural project. There typically, not always, but typically is also greater risk. And EB-5 investors need to be very thoughtful and careful. And I often wind up talking to our EB-5 investors about Convergence, whenever they don't have a rush. Occasionally, families have a legitimate reason that they really only want to look at a rural project. Most families, I think, over-rotate on that issue. And to protect your immigration benefit and to protect your capital, a project like Convergence, which is the construction is virtually completed, so the jobs have all been created. Robinson Park and Gardner Tannenbaum are market leaders and have a great track record of returning capital to their investors. So, we're very confident in this project. And yes, from a processing standpoint, it may take a little bit more time, but if you're located in the United States, you can do your adjustment of status. If you're located outside the United States, if you're coming to us early enough in your family's decision making, you may not need to rush, the processing. So we're very proud of the project and very excited to be partnered with Mark and Megan and their team. And thank you, Shilpa, for hosting us today.
Thank you, everyone. Now I would have some points for housekeeping before we go in further with questions. So For all the audience, please use the Q&A button in the Zoom software to submit any questions. We will try and work them into our conversation, or we will answer them live at the end of the session. We are recording this event, so you will get a recording link at the end, and you can view the recording again later or even share it with others. And as part of this well-regulated investment advisory industry, I will need to read a disclaimer before we delve further into this project, into the webinar. Please bear with me, it's a little boring. This marketing presentation and event do not constitute an offer to sell securities. If you're interested in reviewing project investment documents, we ask that you connect with LCR Capital Partners directly so we may confirm you qualify as an accredited investor or the equivalent standard in your market. We can then direct the conversation toward your individual or family's specific needs and circumstances. This presentation does not constitute legal immigration advice. If you require legal advice, you will need to establish a contractual relationship with a licensed immigration attorney. LCR Capital works with a number of the industry's most respected immigration attorneys, and we are very pleased to make referrals upon request. All statements regarding immigration timelines, job creation, capital return, and project valuations are forward-looking in nature and are subject to change. Past performance is not indicative of future results. Thankfully, that finishes it. And let's stop with that and get into the hard questions for Mark and Megan. Mark, I'd like to first start with you. You have been you already talked about, your track record in commercial real estate and how Robinson Park has been around for 120 years. And this is actually a project which is being developed jointly between you and Garden Tannenbaum, just like Sherman just mentioned. How did this partnership come together, and what does each firm bring to the table?
Yes, so Dick is the leading multi-housing and industrial developer in the state of Oklahoma by far. I am the largest office owner and developer in the state of Oklahoma by far. Dick also has a very large federal government portfolio of over 120 assets across the country. Dick and I are really good friends. Dick and I would consider Dick one of my best three friends. We live life together, and we decided that we wanted to start making a difference outside of our own portfolio and make a difference and build what we believe are generational projects. And we do it with the support of the city and the state. And this is a perfect example of the innovation district that was created, but it didn't have a place. Dick and I built a place. And we also built a public facility inside the Convergence district called the Innovation Hall, which sits right next to the project we're talking about. Dick and I also have a partnership with the city of Oklahoma City to bring high-end manufacturing jobs to Oklahoma City in a project called OKC 577. And it is a $1.5 billion development from an industrial standpoint. And we put the infrastructure in, the city gave us the land, and we share the profits as we move forward. So, that's Dick and I.
That's great. And coming to the Oklahoma City market, some of our investors, Mark, they get a little spooked when we talk about office space because there has been some bad news about office market in other parts of the US. How is Oklahoma City a little bit different in that respect?
Yeah, I mean, I think if you read the headlines and you look at market stats, it really doesn't tell the true story, because anytime you do a market report, whether it's done by our firm, Newmark, or JLL, CB, or Cushman, which are the four big firms, you have to identify every property that is potentially available for lease. In our market, we have very little new construction. So, given where interest rates have risen today and where construction costs through inflation, it really isn't feasible to build new buildings. At the same time, there are a number of buildings in the downtown core, I would say 7, that were functionally obsolete from an office standpoint. Those assets are currently being converted into residential. So those properties, as they're getting taken off the office market, those few tenants that were in those buildings are being spread throughout the community. And I will tell you, Dick Tannenbaum is the major factor. He has bought 3 office buildings in downtown Oklahoma City, taken them off the office roll, converted them into residential. And we have 3 others that are under construction right now or under renovation right now. So I think that the numbers are misleading when you when you really peel back what you consider Class A and B space. Our occupancy is in the mid 80s%. So.
Great. Yeah, I think there is some confusion on people generally look at these reports, even if you look at like a Cushman report that just came out, and they think that the vacancies are going down and then why would we invest in this? But I think that's the point, right, Mark? I mean, this is not to be compared. It's not apples to apples at all because this is a different asset. So a little bit on that, how Class A is slightly different and what the trajectory you think will be going forward.
Yeah, so so COVID really wreaked havoc on the office world. But what we have found is there is a flight to quality no matter what city you're in. And people are looking for amenity-rich projects, newer facilities, and they're willing to pay for that to attract their tenants back to the market. I will tell you, Oklahoma City wasn't affected by COVID office space as much as some other markets. We were really back to the office relatively quickly. So I do think there is definitely a flight to quality, and people are willing to pay for that to provide a new, better working environment. And there's just some of the 60s and 70s and early 80s buildings just are not functional to meet today's environment. So.
Great. And the city itself is, we call it as the #1 lowest cost of living large city in the US, and, #3 hottest job market. How is that playing out? And, can you talk a little bit about what your perspective is on the city's trajectory as a whole in terms of real estate?
Yeah, so you really got to kind of go back to the late 70s and the oil and gas boom. That's what really put Oklahoma City on a huge trajectory. Then we hit we really hit a significant downturn in our economy coming 1984. We really took us all the way through 2000 until we really got back on our feet. And really what ultimately happened is we lost a bid to build an American Airlines facility here in Oklahoma City. And we had all of us city leaders sat around and said, what are we going to do to change that? What do we need to do? We did an exit interview with United Airlines, and they said we couldn't see our employees living in that city from an amenity and environment standpoint. So what do? We started what we called MAPS, Metropolitan Area Project System. We reinvested in ourselves as a 1% city sales tax that built infrastructure, built amenities and quality amenities that are made to attract people. We then also invested significantly in aerospace and defense, biomanufacturing, in the financial sector. So we've we have really repositioned our city. Not that we're not still an oil and gas city. We still have a lot of oil and gas here, but it's a much lower percentage of our overall economy, and we stood up some new environments. So.
Great. Thank you for that perspective. And Megan, I'm now coming to you. I'd like to understand from you first on the status of the tenants right now. You've got some really great tenants already in the building, big names, and I believe there is also a strategic sort of way Boeing and US Air Force are looking at this building. I'd love for you to tell us a little bit about that.
Yeah, so I'll start with the strategic partnership that you just highlighted. It is on the 8th floor, the top floor of Convergence, and that is among the University of Oklahoma. Their research and partnerships group have a focus on both of the industries that or 2 of the industries we focus on at Convergence, which is bioscience and aerospace and defense. Specifically on the 8th floor, the aerospace and defense partnerships is a strategic partnership they formed with Boeing, as well as the United States Air Force, their software engineering group. So right now, higher education, The industry sector and the government sector in terms of aerospace and defense do not currently have shared space across. And so this is really becoming the blueprint for how those three entities work together across the country. Um, they're working on how they work together, how do they share classified space together, and we're really excited for that partnership to be the catalyst for how they all work together. Beyond that, we have a focus, like I mentioned, on bioscience. So we have Wheeler Bio. They are have a CDMO. Um, uh, and then as well as wet lab space. Mark, are there some other tenants you'd like to touch on as well?
Well, yeah, obviously the one of the big items is the venture studio on the second floor, which is a combination with the City of Oklahoma City, the Innovation District, OU, and ourselves, funding a innovation lab that really stands up new technologies around aerospace defense and biomanufacturing.
Got it. No, thank you for that. Because, this is when you look at this, not an ordinary office space. It's got very strategic tenants, and you're almost 40% there, right? In terms of occupancy. And I believe you also have a very strong pipeline of future tenants. You're evaluating those. Megan, do you have some color on what the future leasing pipeline looks like? Or anything that you
Yeah.
could give us? Yeah.
Um, Great momentum right now. I have a aerospace and defense tenant coming into Oklahoma City next week to tour the site and have a conversation with industry and government partners in the aerospace and defense sector. They would be for 2 floors of Convergence. We have another life science company that we've toured several times and continue to have really strong discussions with. And they would be an entire floor of Convergence. And Mark, do you want to touch on some more?
You bet. We have some strategic support companies. We have a company called Summit Financial, along with currently who's in the building, which is Busey Bank, which is a very large regional bank. In addition, we have a company called ARL, which is right across the street in the OU's research park. They're needing to expand, and they're talking about potentially taking a floor. So I think that we're fairly confident that by the end of the year, all the space will be full. And Chip, I think one correction is we are actually 55% pre-leased
Oh,
now.
that's great.
Yeah. So, yeah.
Great, that's great. So 55%, and I think by the end of the year, you're expecting to completely be occupied. I
Correct.
think that'll coincide with when you finish construction. I guess you're expecting to finish construction also by
Correct.
the end of this year, right? So yeah, Megan, coming to construction, where does it stand right now in terms of what is the current status of construction exactly? I mean, I know you're looking to complete, but are we just looking at interior fit outs right now? What's the situation?
Yeah, so do you mind if I give an overview of the project and then
Sure.
we can go into more of a construction status update? So, the broader Convergence master plan was intentionally designed to be a fully mixed-use development that serves as a catalyst for a larger vision around innovation and urban activation. So, the first phase, which is complete from a core and shell perspective, is an 8-story office tower supported by 2 levels of underground parking. From the beginning, we made a very intentional decision that we don't want to disrupt the district or development with an above ground parking structure. And so we wanted to prioritize an outdoor pedestrian experience, open space, and public facing amenities that create a more walkable environment. And that approach allowed us to incorporate the outdoor amenities throughout the site, including Stiles Park, which is the city's oldest park, as well as a pedestrian walkway that physically and visually connects the office tower to Innovation Hall. Mark has briefly touched on Innovation Hall, but I'll go into a little more detail. That is a city-owned and operated facility that plays a critical role in the innovation district of Oklahoma City. It includes a workforce training center, a conference rooms, an event hall, cafe, and a lot of collaborative lounge space for entrepreneurs, companies, students, and anyone in Oklahoma City, but specifically focused on innovation. And so it's a public facing hub that just reinforces the collaborative nature for what Oklahoma City is focused on right now. So everything I just summarized is in the first phase. The entire core and shell of the eight-story tower is complete with we've said that 55% of the space is occupied. Um, Most of that space is built out. But really in the office tower, what remains is interior fit out of tenant spaces. But then the two levels of underground parking, Innovation Hall, the outdoor amenities are all 100% complete.
Superb. So I think that's very rare to see for investors to know, like, EB-5, very rare to see that a project is so advanced in its construction that pretty much, you can say kind of reduces the construction to a very large extent. I would say it's pretty much nil here. Also, job creation risk. This project has already created 1,600 plus jobs, and we only are, seeking capital from 69 investors. So we just need 690 jobs. So there's a lot of cushion already. Your immigration benefit looks like it's solid. It looks like your capital return also looks much safer. So this is a very high quality project in that, and very rare to find these kind of projects in the EB-5 market. So that's what I would say. Sherman, do you want to spend a few minutes talking about why this, the way the EB-5 is being structured here, with a view to taking out the senior most loan here, and why that is little differentiated as opposed to some other projects we do?
Sure. Currently, Mark and Dick have a loan from two banks, Stride and Gateway, for about $54 million. And the way we've structured the deal, as the EB-5 capital comes in, when we fully pay down Stride and Gateway, which we hope will happen before the end of the year, the EB-5 and LCR will be the senior lender in the project. And that is, I think, a very attractive place to be in such a high quality project. So, it's a very accretive to Mark and Dick because of the nature of the low cost capital. So it's, as EB-5, I say, is a win-win-win. A win for the investor, a win for the developer, and a win for the American economy as well.
Thanks, Sherman. Megan, coming back to you on, investors are very focused on the capital stack. What are the other pieces? Who else is there on the capital stack with them? So if you could quickly just, summarize that a little bit for everybody on where the capital stack is today and what will happen once the EB-5 is fully raised. You're on mute, I think. Yeah. No problem.
I'll go through the capital stack, and then Mark, if you want to touch on where the EB-5 funds will go. So we have our primary debt, which is with Stride Bank as the lead and gateway. That's 54 million. We have, and I'm going to talk in round numbers.
Yeah, sure.
So we have CPACE financing, which stands for Clean Commercial Property Assess Clean Energy, and that is $28 million of our capital stack. We also have tax increment financing through the city of Oklahoma City. And what shows the strength of everybody's confidence in our project, as well as our partnership with the city, is that the tax increment financing was 18.75 million. Typically, 99% of the time, our city structures that as pay as you go or based on performance. The city gave us our 18.75 million upfront, which was incredibly significant, and was able to help support this project, the execution of this project. We also have new market tax credits, as well as partner equity from Mark Befford and Dick Tannenbaum. And then we also have something called the Leverage Act, which are state adopted. And what that is similar to tax increment financing. but it is sharing in the revenue, the incremental revenue increase of sales tax spent on equipment or materials to make convergence happen. Mark, is there anything you would like to add to
Oh,
that?
excuse me. I think we already touched on the MAPS dollars as well as
Yeah.
EB, and then the ED grant from the federal government. And as far as the funds that come in, they will be dollar for dollar paid back, paid down our loans. So there is no incremental debt that being placed on the property. Is purely replacing the Stride and Gateway debt. So,
Yeah.
Shilpa, if I may chime in, this is another thing that really impressed me and our credit committee at LCR about this project is the amount of both federal, state, and municipal support for this project. That's very significant. That does not happen in most EB-5 projects. So, at multiple levels of U.S. government, federal, state, and municipal, local city government, they are squarely supportive of Mark, Megan, Dick, and their expanded team. And that is an incredible de-risking factor from LCR's perspective.
Absolutely. So, in fact, if you look at it, you once EB-5 replaces the senior lender, it EB-5 investors end up having a senior sort of, or rather, first charge on the collateral, which is again amazing for EB-5. That's not usual. Most EB-5 loans are structured as a mezz debt second to another loan. So this is again a very good sort of instrument, or rather a place to be in the capital stack. Now, the $1 million question, Mark and Megan. Mark, I'll come to you. I mean, this is what investors ask us all the time. How are they going to pay my money back, right? That's the $1 million question always.
well, we firmly believe in this project, and Robinson Park owns and or manages $2.6 billion of real estate across our portfolio, and we're continuing to grow. We firmly believe that we'll be over $3.5 billion, and purely on we're growing not by acquisition, we're growing by development, and we're growing by not buying companies but buying buildings and really changing what we believe our lives. We have never, Dick or myself, have ever given a property back to a lender, have never not paid any debt, and we both have been doing this for 40 plus years. So I think that hopefully our track record speaks for itself, and this project will be successful. We will ensure it to.
So, Mark, this is a 5-year loan, and I think typically at the end of 5 years, would you say it is more likely that you'll refinance this to pay the EB-5 investors, or are you looking like at a sale, or how is it, or is it mostly from operating cash flows? How are you thinking about the repayment?
Yeah, this is a legacy project for us. We fully believe that we'll continue to own this until both Dick and I have moved on to a greater life, and this will stay within our families, and we would just refinance this. And we have a significant amount of lenders that we work with today, both Dick and I, and we will absolutely refinance this given in the 5-year period. So yeah.
Got it.
Yeah.
Understand. Megan, coming back to you, this is a complex project, of course, and it also includes two developers, not just one. And so, what is the most complex activity, or rather, what could go wrong now, right? I mean, you already almost finished with the construction. I don't think there's anything much left there. Probably, I think what I could think of is, what if the 10 tenants don't come in, or there's something soft, the occupancy goes down. That's a question that investors come up with, thinking about what's going to happen if we don't end up filling the entire building, and what's the worst case in that case.
Okay.
I don't think it's a matter of what if, because we are going to fill this building. We have significant momentum right now, and the leases that we're signing, these are all tenants that they have a track record of having long leases in the spaces that they've been in previously. So We're not worried about what happens. We're getting tenants in here, and those are tenants that are long term and will stay.
Mhm. Got it. Sherman, in your you've actually gone and visited the building, and you've seen from your experience of, being a Navy pilot, of course, and working in the Pentagon, how is this strategic to the US defense and aerospace industry?
Uh, well, one thing that's very important is that to elaborate a little bit on what Megan talked about earlier, the collaboration that's occurring between Boeing, the U.S. Air Force, and the University of Oklahoma. That collaboration on classified material can only happen in what's called a SCIF, a secret compartmented information facility. It's basically a vault room with no windows. It's very airtight, signal tight. No cell phones can go in it. It's where classified information is shared, discussed, collaborated on. And so, there really is, as part of LCR's national interest strategy, there really is a national interest component to this project, which is also very exciting to us. So that skiff is being built out and is going to be an important part of that enabling that collaboration. I want to go back to one thing that Mark said a few minutes ago, which brings a number of different threads together for me. He described Convergence as a legacy project
Hmm.
for his family and for Dick's family, and um, he's said that to me previously, and I think it's very important in that you have two of the strongest leaders in real estate in this market putting their personal stamp and their credibility and their family's credibility on this project. And LCR's tagline by our brand is protecting legacies one family at a time. And obviously, we're mostly focused on protecting our investors, and that's our intent by saying that. But this project really resonated with me personally when I heard the level of personal commitment of Mark and Dick to this project. And I think that's very significant. Their track record, as Mark said, speaks for itself over a 40-year period of time. And there's a lot to having a strong reputation, and that means you fight extremely hard to protect it. And so we're very confident that the project is not only going to be successful, but that our investors are going to get repaid on time, and that means a lot to LCR.
Thank you, Sherman.
Thanks, Sherman. Thanks, Mark and Megan. I think that was a very insightful session. And if we can probably open the floor for a few questions. And one of the questions that has come up is, can this loan be extended? And the answer there is, I can answer that it's not going to be extended. It's a 5-year loan. There are no extensions. We also don't anticipate any kind of redeployment. Um, yeah. One question for maybe Mark or Sherman, one of you can take this. What happens if the desired amount of EB-5 is not raised?
Yeah, Sherman, I'll take
Sure.
that.
Go ahead, Mark.
So when the dollars come in, it's just a dollar for dollar pay down of our existing debt. And our current lenders are happy to stay in at whatever level. So let's say 40 million come in, they'll continue to have a $14 million loan. So,
And I would say, and that's exactly the right answer. And LCR has always completed all of our capital raises, so I'm not concerned about getting to the finish line. We have two significant urgency drivers in the market existing today. The September 30th expiration of the grandfathering clause is significant, and then the January 1st price increase as per the Reform and Integrity Act is significant. So we believe that investor demand for this project, we're already seeing it as strong today, and that should continue through the rest of the year. And I fully expect to raise the full amount by the end of the year.
Great. Thank you everyone for being here today for this session, and I hope this was a good session for everybody. Okay, I think we just got one more question. I think we'll take this last question. As the project is largely completed, how does employment generated during its construction stage available for EB-5 investors who are coming in now? Maybe I can answer that. So as per the EB-5 regulations, as long as you're replacing some kind of a bridge financing or early financing, the jobs created using that early financing are completely attributable to the new EB-5 coming in. So you don't have to worry about that. And that is something we've done in many projects. It's tried and tested. People have gotten their approvals on this. So don't have to worry.
And many other firms across the industry have
Yeah,
done the
not
same
just
thing.
us. Yeah, it's a very commonly done thing. Correct. Yeah. I think we'll just wait for, yeah. I think these are not very, okay, this question is about, we can discuss this. Somebody's asking about collaborating with South Africa, that we can take this offline. But thank you very much, Mark and Megan, for being with us and answering all of these questions very patiently. I want everybody to remember that Mark and Megan are also available on calls, one-on-one calls, to answer any of your questions. In fact, they have been very helpful with any questions that our prospective investors have sent us, however detailed they may be. So please feel free to write in with your questions, or feel free to request a call with the team themselves, and we're happy to do that. You're also very, very welcome to go visit the project. We always encourage our investors to go visit, because it's really impressive when you go see it, and seeing is believing. So I think with that, I'd love to, pause the webinar right now. Everybody will be sent a recording link, and you can always come back.